tennis court, 2 helicopter pads, gotta have that. Bowling alley, but no squash? No squash in this yacht? 85 feet? Pfft, come on, where's anyone gonna sit on that thing? Come on, baby. Broker? Yeah. What's going on, baby? No, I'm not ready to sell. I don't care. I think people have a penchant for video games now, and they're not ready to give it up. Welcome to the BenBen Show. I'm your host, BenBen. GameStop, baby. You don't know anything about the stock market? Don't worry. I'm here to talk to you about it today. I'm going to help you. We're going to learn about it together. I already know. You don't know. That's okay. You're not supposed to know. It's fine. You're an idiot. It's fine. We're going to help you. But first, a word from our sponsors. This episode of the BenBen Show is brought to you by Pornhub. Is that tasteful? Also by Feel the Burn outerwear. Hey Sebastian, these sponsors are a bit, a little sexual. Let's tone it down a little bit for the kids. All right? Tone it down. Melvin Capital, a hedge fund, had shorted GameStop stock, GME, the symbol, at $6 a share way back in the fall. And now it's trading at $330 a share. Oof. That's like a $60 per share appreciation. That's, if you had 1 million shares, it'd be 60. Oh, ouch. And they had way more than 1 million shares. Ouch. This is all started, allegedly, by a group of millennials, young millennials, people that were taking their $600 retail checks, or $600, whatever you call it, the stimulus checks. And it's not fair. It's savings, but like most millennials don't have even $5,000 in savings. And most of the people on the Wall Street forums are probably not day traders trying to push stocks. A lot of them are interested in the market, probably don't play as much as they are interested to talk. Most people that work the markets don't really care about what other people's opinions are, but when it comes to pushing stocks, you can create manipulation through these markets, through these forums, and push stocks up. There was actually a 12-year-old kid back when Yahoo Finance was in its infancy that would talk on the message boards and try to pump stocks and make money from that. The FBI investigated him. I think it's hilarious. They might have even charged him with stock manipulation, but I'm not sure. Can you imagine talking on a message board not being related to a company? You're not, Elon Musk tweeting about Tesla. You're just saying, I think the stock's doing great. And your only reason you're saying that is to get people to be convinced that that's right. And so you keep pumping messages and comments, oh my God, maybe from different profiles to pump up the stock. And you're charged with an SEC violation, and maybe the Justice Department gets involved and you're charged with a felony. What? That's insane. As a kid, who cares? That's crazy. But that's kind of what's happened. A lot of these young people are sick of Wall Street. You think that the Occupy Wall Street was the thing that was important? This is important. If you want to get back into hedge funds and investment banks, make a concerted effort to band together, almost like a international crime syndicate, but that has a negative connotation. It's an international, charity, and fuck over a hedge fund. There's nothing wrong with being short a company, but GameStop has this panache. It's kitsch. It's very... The early days of gaming, GameStop was a vestige. It's almost like people saying, hey, you know what, fuck you. Yeah, we know fundamentally GameStop might be fucked unless it becomes Netflix, but even still, through streaming, there's no real reason to have GameStop anymore because you can buy the games directly from Microsoft and PlayStation, download them directly to your console. You don't really need GameStop. So that market, that value proposition in terms of market share and business model really doesn't work anymore. But because you're messing with our childhood, we're gonna fuck you over. I should stop saying that word because I want this to be child friendly. I don't know, I should stop. I'm sorry. I don't know how to do it though. It's part of my personality to cuss occasionally. So maybe I'm just being original. You might like that, an OG, but maybe you think, oh, you know what? I can't have my kids or can't watch the show because BenBen is constantly cussing. So maybe I have to tone that down. Practice makes perfect. Here we go. So those effing hedge fund managers are messing with our childhood, and we need those effing muffin loving hedge fund managers are trying to screw over some of the last remnants of my young millennial childhood, and I won't allow it to happen. So they've banded together, and the stock's flown flown from like $6-7 in September all the way to $330 a share at the close today. Yum. Yes, I have a little bit of cold, so I apologize. My nose looks stuffy, whatever. Sorry. You just have to deal with it. I'm not gonna be as handsome as usual. I am smoking cigars a little bit. Ah, shit. As I mentioned, Jesus, out of practice. It's hard to look at the camera and then like light the cigar. You should just like go up and down the shaft. It sounds really gay. It's just like get the flavor going, you know. But to look at the camera and do it, that's what that happened. Not because I'm completely inept. My nice lighter's in the shop, as I told you. It also sounds pretentious and whatever, but it's part of the whole like panache of the show. It's supposed to be a little bit of an arrogant ass. Kind of how I am in general. Flirtatious, jerky. I don't know. It's just kind of make fun of myself for the sake thereof. It's just who I am. I'm not doing it for your benefit. I do it for mine. So one of the weird things about me is I get into a lot of trouble when I think something's funny for me, and then everyone thinks I'm an asshole because of, an arsehole, or a hole that is not good. It's the bit PG of ass. I don't know. So yeah, this is really cool. Now, to understand this, the mechanics of how shorting a stock works, I think this is important. When you short a stock, you're not buying the actual shares. You know, say, think of a pie and a company's equity, the amount of actual value that someone owns of the company. This is not including the debt that they borrow from like a lender. This is just the equity, which is really probably the most important aspect of a company because you own a piece of it. You own a slice of the pie, if you will. And say that pie is divided into equal parts of $6. So if you have 1,000,000 $6 shares of that stock, $6 million worth of stock, depending on how many shares are available, the whole pie, you own a certain percentage of that company. Does that make sense? So if there's 2 million shares available and you own 1,000,000, you own 50% of the company at $6 a share. Does that make sense? But when you short a stock, you are talking to your broker and asking them, the broker might even be able to borrow from other brokers, but we're not going to get into that right now. Your broker has a bunch of people that own that stock in their brokerage, and you are borrowing their shares. You are basically being lent the shares at interest, you have to pay interest on it to bet the stock's going to go down. So you don't actually buy them. You just borrow because the person that owns the part of the pie owns it. You're betting against their position that it's going to go up. That's how a short works in general. Now, what a short squeeze is mechanically and how this is interesting. The reasons for a short squeeze can be, I think this is more sentimental. This is more maybe taking a big stab at Wall Street that's made so much money during this pandemic. Maybe it might be about that and GameStop in general. This being a video game company and someone trying to take advantage of someone's childhood and like the fact that it's sentimental. Like GameStop should not be destroyed. The value proposition of gaming and what it's done for people brings them happiness and stuff. And Twitch and the whole world is huge, and it's this derivative market. GameStop is kind of a symbol of kind of like benign, friendly fun, and the fact that it's the evil hedge fund, a financier is trying to take advantage of that, even legitimately. They're betting on the fundamentals, and it's an open market. But sometimes the market acts irrationally. Sometimes it's not a random walk. Sometimes the mechanics of the market can be manipulated, particularly in shorter time durations, where long-term, GameStop, unless it changes its business model, is going to be worth less than $6 a share. It might go to zero. Maybe that's the long-term play. But in the short term, you can profit. And the reason why Melvin Capital got screwed out of its $6 short position is because when you short a stock and the stock goes against you, in other words, it rises or appreciates in value, you have to put more equity, put more cash into your account to protect against the position. Otherwise, you're in trouble. You have to have enough cash available for your broker to feel confident that if this stock keeps going up, because on a short, you can lose all your money and more, exponential, right? So if it doubles, okay, you're already down 100%, right? Then if it keeps going, you owe 200, 300, 400%, 500%. You see how you end up owing your broker. a friend of mine, Martin Shkreli, he's not as bad as you think, did this with, I think, Kalos Bio, and a young man, or whatever, shorted the stock in the pre-market. Some news came out, Martin took advantage of it, and the stock flew. I think the short owed E-Trade like $63,000. That's how it works. Now, why does the stock fly? Why does a short squeeze actually happen? The reason, think of like a step of stairs. As each person closes their short position, because when you buy a stock, how do you close it? How do you make the money, actually take it? Well, your broker, depending on whether you have a margin account or you have a cash account, you sell the stock at, say, $6.10 or whatever. You get 10 cents per share of value, and then in 3 days the trade actually settles in terms of the cash and goes into your account. But a broker often, if you have a margin account, will just credit you instantly, so you can withdraw that immediately. Conversely, the broker might digitally credit you the trade, but you can't actually withdraw the money because the trade hasn't settled. Either way, that's how it works. You sell to another person, you get your profit or your loss, depending. That's how it works when you buy a stock. When you're short, you need someone to be able to buy from to close your position, because you're borrowing. So in order to close, you have to buy shares. And if the stock keeps flying, all the shorts have a limited amount of shares that they can purchase. So it's almost like, this is funny. I own the stock. I'm fine. I like that it's going up. You want it to go down. You are afraid of losing more money. Every time it goes up a tick, you lose money. So you have to borrow to short, and then you have to buy it to then close and get out and protect your finances, protect your bankroll, protect your account. If you're a hedge fund, protect your livelihood, your ability to function as a hedge fund. So you have people you've OPM, other people's money that invested in you, that believe in you. And it's just not good to lose a massive, massive loss in an economy where the market inherently has just kept going up. I think one of the reasons why some of the quantitative trading companies like Renaissance have not performed well, D.E. Shaw has, but Quantum perhaps hasn't, is because the reversion to the mean, when you rebalance your portfolio, which a lot of quantitative computer algos do, if the presumption is the market will recalibrate back to like a 200-day moving average or some variant of normalcy. It hasn't. It just kept going up, 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 up. That's hard to make money. Basically, you just make money by buying and holding this position, despite the volatility. And the volatility has been erratic, and it's confused a lot of these quants. So essentially, the reason why short squeeze happens is I am short. I need to close my position to protect my net worth, my wealth. I buy the stock. I buy it back at a higher price. Then there's fewer shares for the next person to close their short to buy back. And it keeps adding as a ladder. And as we are closing, we're actually contributing to the price going up because we're buying shares. So there becomes less and less of that pie available, which means, what does it mean? Well, the less available something is, the higher the price. So the more people that are borrowing against a purchase to purchase more against the available pie pieces, outstanding shares, means the stock keeps rising and appreciating. And this is crazy because the float, the amount of shares that are normally traded are only so much. There are only so many available. So people are begging to get out of their position just to protect themselves. And a broker only has so many shares that they can borrow against to offer as shorts because they only have so many people that have bought that particular security. So essentially, you're in this horrible position when you're short, and this happens where you have to get out of your position, but you have one broker, perhaps, if you're retail, hedge funds have a little bit more ability, you have to close, and you have a huge position, you can't sell right away. As you're closing parts of your position, it's gonna take days or weeks or even months to do this. And that's probably what Melvin Capital decided at some point, that the risk, it's not worth it to them. Let me put it this way. For tax purposes, for example, yes, I believe that GameStop will go back down below $100, for sure. Some people, I haven't done the cash flow evaluation or multiple. I haven't looked at it before this show, but some people have stated it's worth about $60 a share. Let's say it's worth $50. They have shorted the stock at $6 Much like Valiant, when Bill Ackman decided, you know what, I think Bausch Health, the new name for Valiant, is going to recover, but I don't have time for this. Time value of money. We're so down in the hole, it makes sense to cut our losses and to invest in something else. Get what I'm saying? What is the likelihood that this company is going to not take a loss, or that they're betting on a loss that's less than the status quo? It makes sense for them to get out of this position, take the tax loss, and call it a day at some point. It also makes sense to tell the public that you're doing this, even if it's not your intention. You should be very, very, very careful about, yes, they might have closed their short, but they might have established a new short. I would definitely be short GameStop right now and not worried about it whatsoever. I don't care if it goes to 2,000 because it's going to go back below 100. The business always, always, always is most important. The firm value, the actual fundamentals of the cash flows are really what's important. McKinsey has a book called Valuation, which I encourage anyone that's interested in the stock market to read, which talks about the mechanics of how valuation can be askew from the efficient market. The efficient market being the intrinsic value of a company itself. And they say that sometimes the stock, the book will say, well, we recommend a 20% variant between the highs and lows of the actual intrinsic value. But McKinsey would argue that there might be 2 to 2.5 times that value. So say the stock's worth 50, it could go to 150. For conversely, it can go, it's not going to go below 100, but say it can go, go to 10. So either position, you have to have enough equity in your account to protect against, variance, believing in your valuation. You have to deal with the volatility. And most people can't deal with volatility when something goes up 3,000 fold or what if 6 to 350, whatever that is. It was absurd. Absurd. And a hedge fund really has to, count their blessings that they're not insolvent at this point. But again, this is why you hedge. This is why you don't allocate capital more than 10% generally of your net worth or your portfolio or your bankroll to any one play for these reasons. Because ultimately, they can get you in trouble. Now for shorts, which are almost act like leverage positions because you're borrowing money, you have to think that they must have sold at 50. At 100. They must have started to unwind some of their shares. They didn't take a complete loss at 350. We won't find this out for some time. But my goodness, they're not insolvent. The president's gone on TV. But to state publicly they finally closed out the position would suggest that the damage is done from a public standpoint. Everyone at CNBC saying, "Oh, this is awful stock manipulation." I'm like, this is what happens every day on Wall Street. Why do you care that the little man is getting on the hedge fund on a one particular stock particularly? You think the market's supposed to act efficiently? Then why do we pay all these fees, 2 and 20% to all these hedge fund managers? Let them have their day. It's just one company. It's not like every single person is in on it, in on the short. In order to be short, you have to have another side. It's not like Goldman Sachs is long GameStop at $6. Probably not. Someone probably came in for the trade, not for like the long term, but for the trade at 14, 17. When it got to like 20, this is what I did with dry ships back in 2016. I saw how low the float was. The trading of shares seemed to be discouraged activity. Martin Shkreli talks about this too. In order to encourage trading, you have to create volatility. You have to create activity. Trading back and forth the same shares can give the illusion of this. I think George Economou and Dry Ships, the Greek shipping heir, intentionally wanted to do a reverse split and wanted the stock price to go higher. And so he was churning shares, buying back and forth to create bizarre trading activity. It took the stock from $8, $6, $5, $3, whatever it was, all the way to 120. I sold out at around 80. I bought it at 15.35. I made a lot of money. Made all this money over the weekend. From Friday I bought, sold it on Tuesday. I had surgery for 14 hours on Monday. Had a stop loss available. Looked at my phone when I got out of surgery, like, oh my God, I went through my stop loss because it was, sometimes things are so volatile they can you can't get your trade in. And then if you have a limit, you're screwed because it's like, oh well, you missed it. You should have a market stop loss, so just trade out and no matter what, get out of the position. If it misses your trade, get out of it. Have a wider berth or have multiple stop losses if possible. These things happen. They're crazy. But this shouldn't discourage people from trading the market like, oh, it's crazy. You know, generally speaking, the market does not act and function this way. This is manipulation. But long term, the stock market inherently is, doesn't allow for these type of crazy plays. But this is what happens when you bet against a security, is there can be a lot of power to push the stock up. And the only reason you have to sell is because you might not have the liquidity to force yourself or to give yourself the ability to stay in the stock. You don't have enough equity, you don't have enough value of cash to protect your position, which is how a short squeeze works. You're forced out, which creates this buying frenzy of covering, which is the closing out of a short. And that's what happened. I think it's awesome. I think it's cool. The stock market isn't just about buying and holding stocks. It turns out, yes, that's a thing, but you have a position. You can sell options. You can, options are derivative of the actual shares itself. You can sell premium. In other words, like I own a position. I want to trade around that position. When I think it gets too expensive, I want to sell premium and then let it go back down, buy more shares, or sell sell puts on the actual stock itself so that it goes back down to what I think the intrinsic value is. These are ways of trading around a long-term position or with a time horizon greater than a year. And it's important because this is how the game works. It's a game. It's a casino. You have to, it's for the big boys. In this circumstance, Robinhood won. The little man created its own hedge fund essentially through a global syndicate of people and pushed this stock up. Now, I wouldn't be surprised if a hedge fund got in on it and helped, or multiple hedge funds. There's a lot of quants that have, triggers, and I wouldn't be surprised. Oh, they got help from a firm with maybe $1 billion under management or something more to help push this up. If you start looking at the float, you realize that it seems very unlikely that this is all just retail. You take the average float and you look at like the multiple of that during this time, particularly in the last few weeks, it seems highly unlikely. And when you're a fund, you can control these things, Not everyone's buying at 100. Not everyone's dumping at 150. Obviously, you can't dump a huge hedge fund buying millions of shares at 150. Cannot dump that off to the retail market in one swing. So this is controlled. Someone made a concerted effort to help retail in this position and push GameStop up probably around 50 to 100 share and made sure that they had liquidity to get out of their position in case something went the other way. Provided Melvin Capital did not, as an activist investor or what have you, didn't come forward and say they're getting out, they felt confident they had a buyer on the other end. So you own the shares at a hedge fund at 100. You know that Melvin Capital is trying to unload their position, but they can't. You keep buying. And then when they basically they're waving the white flag, you have a position, like given the amount of shares that are actively traded, it's not possible for them to unload based on a certain time frame. You can have computers do this. Like what's the likely duration of time it would take for them to unload this position at this point? And then you have to see like how many people are buying still. And what is the price momentum? Is it slowing down? Is it going up? You can do this with a pen and paper, but you can do this with a computer as well. And this is the way the game's played. It's very, very fun, very, very cool. It's a great game. It takes 2 to 3 years, I think, for an MBA really to like gauge. In other words, not even an MBA, just financial experience, like to really gauge the precept, and then the concept of application, which you should be doing to learn anything. I don't think learning from books is correct. I think you have to apply, particularly when it comes to like it's basic math. But the amount of work and the oversight of looking at a security, looking at like the cash flow statements, looking at the income statement, the Trinity, and the balance sheet. That's basic shit. But if you want to like make yourself a player, you have to be able to see the ways of manipulating those positions. You have to see inside of just the basic, okay, here's the ROA, ROE, here's return on tangible book value, blah, 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 blah. This is what I think about this. This is, oh, that's wonderful. That's not how you make money. Investment banking, sure, maybe, but you have to be able to sell. You have to give someone a reason to sell the story of a position or a company that's trying to unload, or what the value proposition for underwriting like a merger or working on a merger with as an investment banker. You have to see true value proposition that isn't inherently there, or you have to financially engineer it. This requires time, work, and it's fun. But that's why they get paid a lot of money. So again, I think that the idea of capitalism being evil or something like this is hypocritical, because retail just made all this money. You have a guy that $30,000 bought it in at $6,000. I know that seems like it's a lot of money, but like, I don't know, the average pension for a school teacher working for 30 years is in the hundreds of thousands of dollars. It's perfectly feasible. Some person went crazy with terminal cancer, like Walter White, and said, "Fuck it, let me just buy $250,000 worth of GameStop at 15. It's flying. Who cares? I don't care. I'm going to die in 10 days." Boom, made my family, I don't know, $6 million. I'm retiring into death. This is fun. You just don't know. It's crazy. And we're in a market now where the dollar keeps depreciating. See, I wouldn't be surprised in the U.S. in this like deficit spending environment that Biden's creating, with a $15 minimum wage coming too. Geez, that's not going to help restaurants when they get back. Like, they're already waiting to get back to normal. Oh, by the way, you now have to pay people by 2025, might be 2022, $15 per waiter, per retail seller at your store. Thanks, Amazon's just like, yes, you do. That's what you gotta do. That's what you gotta do. And then they start like, I don't know, creating some sort of like rocket program where they move all their production and like inventory off-site out of the United States, and they just use like, I don't know, like helicopters to fly in the United States and drop off the packages and to pay the $15 minimum wage. I don't know. You just don't know. And there might be some provision there that protects them versus protects like a brick and mortar company that's like operating versus non-operational. Like, well, they might treat there's so many weird little things you could do, but like, this is not helping the economy. It looks like, I wouldn't be surprised if the United States adopts digital coin with a fractional price share that's basically higher than any normal person can buy. Like, you can buy fractions of Bitcoin, keep going fractionally. But maybe there's like a digital coin that like separates like the everyday person. It's a barrier to entry, and like that becomes the standard currency, and the dollar just keeps like depreciating. But they pay everyone else all these stimuluses, universal minimum wage in dollars, which creates this huge gap between the rich and the poor. And it basically subsidizes this false middle class lifestyle, which is completely controlled by the government. I don't know. We should move on. I don't know. Stocks are fun, but they're not for everyone. They're not for everyone.